Okay, this is Brent from TradeGold.blogspot.com, and it is the 9th of January 2007. I was talking about how bad I thought the market looked a couple nights ago, and I said, actually last night, I said I'd do a video tonight if I had time. It's about 1:15 in the morning, and I have time. So here we go. Today on the New York Stock Exchange, advancers were 17 to decliners 14. The Nasdaq was even, so pretty much a mixed market, kind of directionless, just kind of listing. But I'm seeing a lot of things that I think look pretty bad for this market. So maybe we're going to get a chance to really jump on a lot of shorts here, which is my favorite thing in the world to do. First up, I have the SPY, the Spiders, S&P 500 ETF. And one of the things that I'm seeing that's kind of strange here, it's a little worrisome if you're a bull, is this recent volume increase over here. And you can see there's really been no price appreciation there. So that's kind of typical of churning or distribution. And I think that some of the indicators that I'm seeing are confirming that. And we're going to take a look at a few here. Over here, we have a money stream in the top window. You can see money stream made two just about equal highs over here, and over here on the third attempt at that level, you can see it's come down lower, and now it is actually broken down below the previous dip, and it's also below its moving average. So that's spells trouble. Time segmented volume over here 18. You can see it has a downward slope. I can't get my diagonal working here. But I'm using a new indicator, and basically all of technical analysis is basically about comparison. You're comparing different indicators and different indexes and industry groups, and you're basically looking for divergences for the most part, and you're trying to identify the quality of a trend. We see that there's been a very nice trend that's been in effect here since really July. Strange kind of summer rally. It's gone all the way through the winter, and the winter time is usually the hot time in the market, and it looks like we're kind of going sideways here. So, excuse me there. So anyway, I've got a new indicator that I'm using, which is basically based on this time segmented volume down here. And basically the indicator compares itself to itself. Over a number of days. So anyway, here we go. In blue up here is the actual indicator. So like I said, we're looking at divergences. We're comparing what price is doing against what this indicator is doing. So over here, when we're in a pretty healthy stage of this trend, you can see we had a high in this indicator. We made a new high over here in November, but a lower high over here. So that's a negative divergence. Finally, we've made a higher high over here, which is higher than this one, but it's still relatively divergent with the October high in that indicator. Since then, it has dipped down below this last big pullback over here and below these minor ones. So that's definitely not good news. TSV 18, as you can see, is dipped below that zero line. Let's take a look at the diamonds real quick. And over here on the diamonds, again, we have that churning, that recent volume over here that's been churning. And in the diamonds, you can see a really clear divergence. As this trend was accelerating, going up, we were making these higher highs, which is nice. And over here in November, again, we started to get that divergence. Now, on these two successive higher highs, we've actually made lower highs, so we're actually in a very divergent situation with the diamonds, and we're also seeing that with the spiders, which I'm going to pull up right now. Okay, so here's the SPY. A couple other things too. We want to compare different indicators and try to get a feel for what's going on in the market. Here's MACD. That's a big negative divergence. I know it's a little bit difficult to see. Let me see if I can increase that window size. So there's that negative divergence in MACD as we see prices moved up. Again, the churning over here in that volume is not a good thing. Over here in this linear regression channel, you can see it has fallen out of the channel over here on pretty decent volume. There's TSV 18 with a negative slope. That's not good. We're going to look at a longer version of TSV. That's 55 down here in the bottom window for long-term trends, and it's crossed below its moving average. So a lot of things are lining up here. Actually, we've got one more for you. Money stream in the top window in red. You can see here. There's the divergence, and it's making new lows below that moving average in white. So you can see that there's been a lot of trouble recently in the market here. It just does not look good. Here's the Qs real quick, and there's that indicator that I'm using. This is a custom cumulative indicator, by the way, that Warden gives you the ability to write custom indicators, cumulative, price channels, and percentage true. So here's that negative divergence again, breaking down to real bad lows here in the Qs. It's just not looking good. It really isn't. I'm going to pull up the IWM, which is the Russell ETF. Again, here's that negative divergence. Looking bad. One more. There's a spider. Oh, 1 minute. This is the S&P mid caps. Again, there's that divergence. There's that volume, the churning, the negative MACD divergence over here. So I'm getting a little bearish on this market. Let me see what else I have for you today. Apple, AAPL, or is that right? Yeah. So Apple, big day today, up 8.31%. This is pretty much the biggest reason that the NASDAQ 100 or the NASDAQ closed up, because of Apple's big move today. I guess they introduced Apple TV, a movie partnership with Paramount, and apparently a new mobile phone. So the market like that. Gonna take a look at an industry group here real quick. Now this is diversified communications. Okay, you can see big volume over here and a breakdown in, this is a whole industry group down 3.5%. That's pretty big for an industry group. What was going on there? Let's see. We had Sprint, Nextel guided lower, and they were punished for that, down 11.15%, big volume. And this telecom sector very recently is not looking too hot. Let's take a look at Sprint with this new indicator that I've been showing off. You can see it's pretty much in line over here. Let's see what it looked like on an hourly. All right, it was pretty much in line. It kind of looks like this was a surprise to the market. It doesn't look like it was being acted on by smart money at this point. So let's see what else we got. The biotechs, which have been pretty hot in the last couple days, but this group, oh, one more time. This group's not looking all that hot in my opinion. Okay, so you can see we have what looks kind of like a toppy little formation over here. I'm not sure I would quite call it a head and shoulders, but some kind of a toppy little formation that's going on there. And if we look at my new indicator, which I really like this indicator, it's working out very well. It's got a big relative divergence between this point over here. You can see what happened when this indicator went divergent back here in early 06. Right, there's the divergence, there's the plunge. Over here we tested a bottom and it went back up, and now it's got a relative divergence over here and a plunge over here. So biotechs, be careful. I know a lot of people are in those and they're making good money, and probably pretty happy to have them, but you got to be careful with those right now. Celgene is a biotech that has been mentioned on the blog December 18th and January 3rd video as a short, and it broke down today 4.28% on a very big volume there. And I want to show you one more biotech here. Here's STEM. This was an evening star doji, or doji evening star. There's a bearish engulfing on that. Right now that's a short with a stop above today's high. And guess what? I just ran out of time. So I'm going to be back. I got some ideas for you. We'll be right back.